Thank you, Mr. Chair. My amendment would include language to ensure that the Financial Stability Oversight Council, or FSOC, examines the threats that climate change poses to our financial stability. FSOC, of course, has responsibility to identify any and all potential risks to financial stability, including climate-related financial risks, and to push its member agencies to respond to those threats. 2024 was the hottest year in history. It was the first calendar year when global average temperatures exceeded the Paris Agreement's target of 1.5 degrees Celsius above pre-industrial levels. We got to understand that's not just a random number. That is the number that climate scientists came to report years ago was the number at which we were going to hit irreversible changes in the climate and accelerating changes. The feedback loops are working in the wrong direction at this point. I would remind you all, or at least those of you who are my age or older, back in '92 when Hurricane Andrew came, and it was a big deal that there was a $1 billion weather event. I think Hurricane Andrew came in a little over $10 billion by the time it was all done. In 2024, climate-related disasters resulted in economic losses of more than $180 billion. In 2025, the preliminary estimates from California is that we are already up to $275 billion in just one claim. This isn't, whether or not you agree with the human causes and human-caused climate change is really not the point here. Because we have heard on this committee over the last several terms that, number one, the more likely your property is to be in a flood-prone area, the more likely the banks are to offload that risk onto Fannie and Freddie. We have heard on this committee from Fannie and Freddie that they are aware that they are taking on these risks, but they have access to reinsurance markets to cover that risk. We have heard, or we've seen, at least in the recent news, Governor DeSantis in Florida saying that their insurer of last resort may have to be socialized, and I think all of us are anticipating the day when they're going to come asking us to help bail them out. We have heard in California questions about the solvency of their insurer of last resort. We had heard recently, Mr. Barr, when you and I were in Europe, meeting with Zurich Insurance, and our colleague, Mr. Obernolte, was pointing out that if his constituents lose their home in a wildfire and the insurance company re-rates it, does that violate some kind of principle of insurance pooling? I think he said if we don't allow pre-existing conditions to be prejudicial in health insurance, why should we allow that in home insurance? The point is we're all hearing this from our constituents, right? And as my friend Spencer Glendon, former managing director at Wellington Capital Asset Management, has painfully but accurately pointed out, our species has lived when climate was this volatile before, but back then we were a migratory species. And we now are sitting here in a financial system where most of Americans' wealth is tied to a specific geographic location, where we know that sea levels we've locked in 2 feet of sea level rise on the Gulf Coast, which means that there are huge amounts of Florida, Louisiana, Alabama, Louisiana, and indeed parts of the eastern seaboard, where if you buy a house today, you will lose it before the 30-year mortgage is paid off. That's locked in. And so the question becomes, if the banks are offloading this risk to insurers, if the insurers are choosing to walk out of that, if the reinsurers are tentatively there and they're putting it on Fannie and Freddie, at some point it's going to come back to the taxpayers. And so we have jurisdiction over insurance generally. We have jurisdiction over the banking sector. We have jurisdiction over our banking regulators. I would submit to you that it behooves us to get out in front of this, especially since our colleagues in those co-equal branches are walking away. Trump has once again pulled out of the Paris Climate Accord. The Fed just pulled out of the NGFS. This is not about determining what action we can take. This is, do we want information or do we want to put our heads in the sand? And so this is simply an opportunity to make sure that we get that information, to make sure that we're informed. And I just close by noting that earlier today I was at a meeting with several folks in the banking industry, and they were talking about what room there was for good bipartisan action on this committee. And there was a joke made, but it's only funny because it's kind of true. They said the Financial Services Committee seems to be really bipartisan in responding to financial crises and really partisan in trying to prevent them. I would just ask us all to, on this one where we are getting information, where we have these issues that affect all of our districts and are only getting worse, let's try to break that habit. Let's try to make that joke not so funny, urge support, and yield back.
Gentleman yields back. I recognize myself for 5 minutes. Appreciate my friend always raising these issues related to climate-related financial risk. It's not just the regulators that are exiting these international climate-focused agreements. It's not just the Fed and some of the prudential regulators exiting the network for the greening of the financial system, and mercifully so. But it's also the private sector, and my friend from Illinois is very good about talking about market-driven demand for this. And apparently the market has turned on the private sector because all of the major banks in the United States, JP Morgan, Bank of America, Wells Fargo, they've all now exited the Net Zero Alliance. And the major asset managers of our country. And why are they exiting the Net Zero Asset Alliance? Well, in its annual securities filings for 2023, BlackRock acknowledged that mounting scrutiny from stakeholders, regulators, and clients could adversely impact the company's reputation in business. So it does turn out, after all, that the market is interested in what? Returns. Not the politicization of asset allocation, but returns. Thank goodness that we have returned to the concept that capital should be allocated based on efficiency, based on the highest and best use, not based on political, fashionable trends. Look, climate is a real issue, and climate, as my friend from Illinois points out, does carry with it, and weather carries with it risk. It always has been. It always has, especially in the insurance context, as he pointed out. And regulators must keep their eye on all of these risks, including climate risk, including weather-related risk. Bank regulators and FSOC must not seek to expand, though, their missions beyond congressional authorization, especially in the area of climate change, attempting to serve as de facto climate regulators. We have in our oversight plan, on page 2, Financial Stability Oversight, the committee will review the operations, activities, initiatives of FSOC and the Office of Financial Research. The gentleman from Illinois, other members in our oversight of FSOC can certainly raise these issues. But I would submit that instead of creating separate and unique climate-specific regulatory mandates, climate should be considered within existing frameworks, such as credit and operational risk assessments, which prevents the need for overlapping and prescriptive regulatory measures. The fact of the matter is, to the extent changes in the weather pose risks to financial stability, they are already taken into account. And by the way, not just by regulators, but banks and insurance companies have always taken into, for centuries, taken into account weather-related risks. And so I think the gentleman's amendment, while well-intentioned, is superfluous and unnecessary, and I'll yield back. The gentlewoman from California, the ranking member, is now recognized for 5 minutes.
Thank you very much. I commend our colleague, Representative Casten, for offering this important amendment that I support. The wildfires that have impacted thousands of families in Los Angeles County are just the latest example of climate-related events that are happening more frequently across our country and with more devastating impact. Unfortunately, President Trump has already pulled us out of the Paris Agreement on climate, and I'm deeply concerned others want to follow his lead and stick their heads in the sand regarding climate. Regardless of what Trump does, our committee needs to do our job of overseeing the financial system and ensure all steps are being taken to monitor and mitigate all threats to financial stability, including climate-related risk. The Treasury Department issued a report last week, and the title of their press release says it all, and I quote, "Homeowners insurance costs rising. Availability declining as climate-related events take their toll," end of quotes. Having said that, I would like to ask the new chair let me put it this way. Did you understand what was being said about these risks always being taken into consideration by insurance companies, et cetera, et cetera? Did you understand what he was saying?
Are you asking to enter into a colloquy with me
Yes,
about insurance risk as it relates to climate change?
yes.
Yes, I did understand that.
Well, say so.
Well, I think that we all understand, especially in light of the disaster in your neck of the woods in the state of California, that the wildfires are presenting a real challenge, and that as a member of the Financial Services Committee and as the subcommittee chairman of Housing and Insurance, I am very passionate about housing. I asked to be on that committee as my first preference when I came to Congress, and I think there are things we can work on to help mitigate some of the risk and the disaster and the effects that are affecting so many good people in California right now. And I know that Chairman Hill and Subcommittee Chairman Barr are willing to work with you, but as to this amendment, I don't think it's necessary. This is your time, by the way.
Yeah, and reclaiming my time here, let me just say that whether or not climate change is recognized, as you care about housing,
I do, very much.
and, you know, we can build better housing, we can reduce the cost of housing, we can change the materials in housing, et cetera, et cetera. But I suppose the question is, do you recognize that the winds that took place 100 miles per hour in LA County and the destruction that took place has to do with climate change? No matter what you do about housing, that climate change is the cause of what happened in LA County?
Well, I live a long way from LA County. I live in the middle of the nation where we've seen an increase in tornadoes and hail events, and certainly having an impact on the house insurance market in Nebraska, where we've seen our premiums increase 60%, which is very difficult. I share a lot of concerns about California's situation, one of which is forestry management. The other one is a lot of your insurers have pulled out of your state due to some state laws and state regulation where they are unable to price the risk. As it relates to the weather patterns on the West Coast, I'm no expert, but I'm certainly not denying the fact that climate change could have played a role in that. And I think at the end of the day, the bigger issue is how do we adequately price the risk around the entire United States and then navigate that. And I'm very excited to work on that issue, and I know how important housing is to you and to the people you represent, and I look forward to working with you on it.
Well, thank you very much, and I'm very pleased to hear you say that you understand that climate change is playing a role in what is happening.
To be clear, I'm from Nebraska. I cannot speak to California's weather
No,
patterns.
I'm not talking about California. I'm talking about the entire country. I'm talking about the world. I'm talking about climate change, but that's okay. I won't press you any further. Thank you very much. And Mr. Casten, thank you very much for the attention that you have paid to this issue and the work that you continue to do. And the more we have the kind of incidences like is happening in LA County, perhaps the more we will have more people agreeing that climate change is causing this kind of destruction.
Time's expired.
Thank you, and I yield back.
The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Move to strike the last
Strike the
word.
last word.
Yeah, thank you, Chairman. And look, thank you, Mr. Casten, for your passion for this issue. And I just wanted to comment on Mr. Casten's comment that, you know, when we react to a crisis, it's often very bipartisan, but when we try to prevent it, unfortunately, sometimes it is partisan. And I remember last Congress when we had hearings talking about the insurance market in California. We were trying to prevent a crisis. The market was saying, gosh, there's an awful big increase in risk of fires. There's an awful big increase of the size and scope of those being not able to be contained. The FAIR plan, which is the backup plan for fire insurance, seems to be massively undercapitalized. And Californians were saying, climate change, climate change, climate change. And the insurers were saying, yeah, we believe that there's going to be a higher risk of many of the same things that you say are higher risk. We just need to be able to price the risk. And California's reaction, which is their purview, they're a sovereign state, said, well, we're going to cap the prices. And the insurers said, well, we're not going to go bankrupt for you. Well, we were trying to sound the alarm and say maybe we should send a message to the California regulators. It's not be well thought out. So as we look to come together and respond to this crisis, I do hope that we take into account that not every solution that waves the flag climate change is actually meant to address the problem. The market is sending signals that, yeah, there's more risk. And some of our colleagues would just say, well, let's open up the checkbook. We'll just keep writing checks and expect you to change nothing about your behavior. And the reality is we probably should change some things about our behavior. And I look forward to working together to prevent more risk in a bipartisan way. And I think that the spirit of the amendment might be intended that way, but because of the way it's working out, I do oppose it. And I'll yield to the chairman.
Pardon?
I yield back.
Gentleman yields back. Is there further discussion or debate on the amendment?
I move to strike the last word, Mr. Chairman.
Gentlewoman is recognized.
Thank you. Let me say that I strongly support this amendment coming from Texas and certainly seeing the risk that has been put on us, not only in terms of insurance risk, but just risk generally from a lot of different threats that come through the climate-related issues, everything from hurricanes to rains to tropical storms to the snow yesterday. So I think anybody who tries to suggest that there's no climate-related financial risk and that has not increased the cost of insurance, which means it increases the cost of your home, just has not been reading the papers, has not been reading the tweets, has not been reading anything, probably been hibernating because it's too cold. But I just want to thank Mr. Casten for this amendment. I can tell you that coming from Texas, I know we need it. So with that, I yield the remainder of my time to you or the ranking member, as we both desire.
Thank you. Thank you, Ms. Garcia. First, to my friend, Mr. Davidson, I would love to continue the conversation with you about state insurance markets. I would point out only that we will irk all of our state friends if we have an honest conversation, because every state has different ways that they price insurance. There's a significant concern I have, particularly in climate change, that we're seeing some cross-subsidization between states. We have been pushing FIO to get the insurance companies to provide the data. They have been reluctant to disclose. And I think in the interest of making sure that we understand where those risks sit in the system so that we don't have to bail them out or have the taxpayers bail them out, I'd love to work with you on more disclosure. But more broadly, that is not a question of markets working efficiently. That is a question of markets intentionally withholding data, misrepresenting data so that they can profit off risk, which is fine. I spent 20 years in the private sector before getting here. I raised and deployed $200 million, equity and debt, spent a lot of time in those markets. And to Mr. Barr and his comment about the private sector responding in certain ways, let's be very clear about what the private sector is doing. Number one, banks who can offload risk before it comes to maturity will. That's smart. That's why the banks have told us that they're offloading risk onto Fannie and Freddie, because they are confident that we are too stupid to watch and see what they're doing, and we'll take risk that they have priced and decide they don't want to hold to maturity. That is a smart thing for the private sector to do, but it doesn't make it an efficient market. What we also know, as Mr. Barb noted, is that banks are looking to appease regulators in states who have said, I am not going to allow you to manage my pension if you invest in things like climate change related, if you invest in things, if you choose not to provide investments to things that you in your banking view as risky, but me in my views as anti-woke or whatever nonsense we have. And those banks have decided that it is cheaper to appease regulators than to manage risk. That is not an efficient market. The fact that they're doing it is a sign that markets are not working, not that they are. Number three, banks, like every other private sector actor, want to sell their assets when it comes time to sell to people who know less about their assets than they do. You always make more money selling to an uninformed buyer than to an informed buyer. The question of what this amendment is doing is not saying we got to go get woke. It's saying we need to make sure that we have access to that data that nobody in the private sector has an economic interest in providing. And we can then decide, once we have that data, how do we use this data, what policies do we make, and do we, in our commitment to competitive markets, disclose this data so that buyers and sellers can make informed decisions in the marketplace? This is basically a question of, are we pro-market? Are we in favor of equal disclosing of risks? Or have we decided that climate change is so politically toxic that it's better to hide our head in the sand, knowing full well that the end result of that is that the risks ultimately get put on the taxpayers, and we have to bail them out?
Gentlemen, yield.
It's Ms. Garcia's
Ms.
time.
Garcia's time.
Will the gentlelady yield?
It's my time, and I had asked him to yield to the ranking member if she needed more time.
Ranking member, 23 seconds.
Let me just say that I appreciate what Mr. Davison had to say. This is not just a California problem. Of course, the wildfires have reaped devastation on all of the communities that were in the path of the
gentlelady's
wildfires.
time has
This
expired.
is a national, international problem, and it's not
gentlelady's
just
time has
management by anybody in California that could have stopped the winds in the way that they performed. Thank you.
Gentlewoman's time has expired. Is there further discussion or debate on the amendment? If there is no further debate or discussion,
Mr. Chairman, I move to strike the last word.
gentlewoman is recognized.
Thank you, Mr. Chairman. I agree with Ranking Member Waters. This is not just a California problem. I live in the Deep South in Georgia, in Atlanta, and I've talked about this in my committee work here, where my insurance company dropped my husband and I's homeowners insurance just last year because of our neighborhood and the extreme weather events that we've been experiencing, especially with the tornadoes like you see in your part of the world. But these are extreme weather events that are across the country, and that is exactly one of the reasons that was used when my homeowners insurance said that they would not be renewing my homeowners insurance last July. And so I just want to make sure that we understand that this is not just a California issue. This is something that is happening across the board, and that is why I know, Congressman Casten, that our colleagues in the state legislature, they will be very upset about us talking about this. I served in the state legislature as a state senator in Georgia, and I was on the insurance committee. And it is something that states like to take ownership in, but we've got to do something about this, and because we have an entire country that we're piecemealing this together, and people should not be fearful on what is going to happen if they can insure their homes, their most valued possession for most people. And I would yield to the chairwoman if you would like to finish your statement. Ranking member.
Well, thank you very much, Ms. Williams, for expanding on this discussion. One of the things that we've got to realize is the role that the financial institutions play in helping us to get to the point where everybody participating in doing what we can to control climate change. What can we do with our financial products? What can we do with the financing of certain materials for the construction of homes and businesses? It goes on and on and on. And to the degree that we get the recognition that has been denied for far too long about the role that climate change is playing in the devastation of not only California, but all over this country and all over the world, then I think we will be able to save homes that we're so concerned about, people being able to own and to purchase, and to be able for our young people, the millennials, et cetera, to be able to have safe and secure places that they can have. So if you're concerned about housing, if you're concerned about financial services, if you're concerned about so many things, you've got to be concerned about climate change. Again, Mr. Casten, thank you so very much for your interest and for your work. And despite the fact that we still have a long way to go to absolutely convince people of the role that financial services play in all of this, we have to keep pushing. We have to keep working. We have to make sure that the information is available not only to other members, but to the constituents that we all say that we serve, and we want to make sure that they have safe, decent, and secure environments and safe, decent, and secure living We've got to do the work no matter how hard it is, no matter how difficult it is. And the more we bring our resolutions and our bills, the more we're going to have to discuss it. Still, there may be those who are not thoroughly convinced, but that's our job, to make sure that we do everything that we can so that no one can say, oh, I didn't know, I didn't understand, I didn't hear, I didn't know that there was legislation, I didn't know that there were things we can do. It's those managing people, it's the Consumer Financial Protection Bureau, it's everybody but climate change. We've got to do whatever we need to do to ensure that those who don't yet join us in our efforts to save our country and to join with others in the world who are already moving forward dealing with climate change. We've got to make sure that we do our work. And I welcome the opportunity because that's why we're elected. We're elected to represent. We're elected to lead. We're elected to make sure that we disseminate the information and we make sure that our constituents understand to the best of our ability what we can do for a decent quality of life, a secure quality lifestyle for everybody. I yield back.
Gentlelady's time has expired. Is there further discussion or debate on the amendment? Seeing none, there is no further debate or discussion. The question now occurs on the amendment offered by the gentleman from Illinois. All those in favor of the amendment say aye.
Aye.
Those opposed, no. In the opinion of the chair, the noes have it. The noes have it, and the amendment is not agreed to. What purpose does the gentleman want to be recognized? A recorded vote has been requested. All those in favor of a record vote, raise your hands. A sufficient number having raised their hand, a record vote is ordered. Without objection, further proceedings on the amendment are postponed. Is there further debate or an amendment?
Mr. Chairman, I have an amendment at the desk.
Okay, Ms. Garcia. We will pause while copies of the amendment are distributed.
Thank you.